Welcome to the Become Sensible podcast, where we discuss practical accounting, finance, and tax for everyday business. I'm your host, Yona, and I'm here to show you that no matter what your business financial situation is, you can change it. Good morning, and welcome back to the podcast Become Sensible. Today, we not talk about year-end bookkeeping, not talk about tax benefits at the year-end. Today, we talk about a very strategic topic that is very important for your business in 2025 because there was a new tax law passed in July 2025. And it's a fact tax 2025 and also moving forward into effect for 2026 and moving forwards in the next couple years. As you know, tax is just not only for compliance, but this is a very strategic level that you do uses to do capital allocations and growth strategy. And it just help you to have a smart decision in your business in terms of investment in business and how to funnel all of these tech codes to help you grow your business. One of the things that I want to clearly say in this is I am a certified public accountant. I am a professional, and my work is just help you to understand tax codes and what is the change, what is the benefits for you, what is the thing that you need to watch out. And that just mean that I'm not having any political statement because I'm not having expertise in politics. So I don't know, and I will never issues a political statement at all. So all of this information is help you to understand what is the change in the laws and how you can use it beneficial for your business and what needs to be watched out. And there's no political statement and support endurance in this endorsement in this podcast at all. So please don't take it like any implicit meaning in the way that you listen to the podcast. And I always try my best to give you the benefits of understand the tech codes. What is the thing that beneficial for your business and what you need to avoid or pay attention in your business strategy. And I never consider taxes just for compliance. If the people who are smart and grow the business and build well and they know how to utilize the tax code that beneficial for them and for their business. So let's dive in simply, calmly, and clearly focus on the major tax advantage you should know. At first, number one is bonus depreciation. It fully restore 100%. So for the last couple of years, bonus depreciation was scheduled to phase down. But the uncertainty is over the new tax law give you 100% of first year bonus depreciation, whether that is for qualified business assets such as equipment or anything that relates to equipment and you use this for the business purpose and placed in the business before January 19, 2025. What does it mean? It means that if you purchase a qualified tangible property such as computer, office furniture, specialized machines or production tool, or even a certain company vehicle, you can take the deduction entirely cost upfront in the year that you place this in the service, which is massive tax benefits. This can be different between you need to pay tax on $200,000 in net profits, or you need to pay just only tax on $50,000 in net profits because you can use that $150,000 to reinvest into equipment, machines, anything that increase the capacity for your business, especially in productions or manufacturing company. They need a lot of plant equipment investment. This thing will help you to take more deduction upfront. And it has massive in terms of tax because it's drive down your taxable income in your business a lot faster. Number two, Section 179 is spent in more generous. Complementing bonus depreciation is expanded. Section 179 is spent. The new tax laws significantly raise the immediately deduction limit up to $2.5 million for eligible property, and with the phase out threshold starting from $4 million, and these numbers both index the inflation. While like most of the small business owner never risk this limitation at all, the benefits is flexible and control is give you the control because you decide how your deduction work, and especially like you can apply this in specific assets that give you a powerful tool to manage your taxable income precisely. Number three, that is R&Ds, which is the research and experimentation. Spend is fully deductible again. So the new tax law does, I think this is one of the most impactful yet underutilized part of the new tax law, especially like innovative founders. If in your business you need to like create new product or service, experience or like custom a automation process, develop the software or like new formulation for like or prototype, you basically can deduct the cost of it immediately the year that incurs. For like creative founder, product company, and tech startup, this is directly, immediately tax back for every act of innovation and development that fuel your growth for your business. So, like if you are in this area in the industry, need to make sure that you pay attention on this spend. Number four is more favorable rule for interest deduction. So normally, like before, interest deduction is become like capped by like depreciation and amount depreciation. So you normally have profits before interest income, depreciation, and tax. And then like the new tax law is actually like exclude the depreciation, amortization, and depreciation from adjusted taxable income. So that is give you the limitation is a little bit like bigger. And that's help you to basically like, especially in any business that need capital to fund their growth, like in real estate, in manufacturing, in many company and industry that need capital to like line of credits or loan to actually fund their growth. This is help you to take like more interest expense deduction. Otherwise would like make the limitation and then whatever you can take the deduction, it need to run over into the next year. But this is give you so much more room. It's just like more similar to, I mean, the formula is a little bit like complex, so I don't want to make you like confusing, like to talk directly the formulation on the podcast. But it just give you an idea that normally the limitation in terms of interest expense can deduct on your business is actually now give more room for you to take the deduction on interest expense. So if you actually need to grow your business, especially in this year, next couple of years, make sure that you consider in terms of capital expense, capital like interest expense, because that's also like if you borrow and you fund your growth, you basically can take that deduction and it has beneficial in terms of tax. Number five is qualified business income deduction state permanently. Qualified income deduction is supposed to be like expire this year, the 20% that pass through entity for S corporation, sole proprietors or partnership. It will like expire by the end of this year, but now it's become like permanent tax code. So if you have a pass to business, normally you would get the beneficial of this 20% qualified business income deduction because you start the business and do the business and you have that just suddenly have that like of course it has a cap in terms of whether you professional service or anything in terms of how much is W2. It's very like deep down complicated in the part of it. But generally you can take up to 20% qualified business income deduction. That is a very generous tax code. The next one is enhance employers provide childcare credits. And this is, I basically tell my clients that see in the in industry that do a lot for like provide the childcare and service and mother service, parenting service or mothers like doula service. And I told her, it's like, hey, you need to take advantage of this tax codes because like employers, small business owners who have the company revenue up to like, I think like 20, 30, $31 million in revenue can get tax credit up to $500,000 that generally those with like those like 31 million, up to 31 million, and get the maximum tax credit up to like 600,000. And that percentage cover the cost is 20% to 50% of the childcare. So if you are small business owners, your company small business owners is in the definition of the IS, and SBA is like I think up to like $31 million. So there's a ton of company that in the range from like 10 to like 20 to $30 million. You want to have the benefits that can help you to retain the talents. This is one of the tax code that you will be very beneficial for you. And it's like your employee just have a like children and you want to like have the service that you pay 20%, I think 25 to 50% of their childcare. Your company take the tax credit for paying that up to like $600,000 a year, which is a tremendous amount. If you're looking the way to recruit and retain the talents, especially parents, this is when the credit offer a highly tax advantage way to subsidize or provide some like childcare assistance to your employee. The next one is 1099K reporting rollback. This is very massive administration relief for small business because it's rely on payment app. Like if you process the payment for for your business through like PayPal to Venmo to eBay for sale, and like restaurants and many industry like let's use all the card processing company. And normally like before, if your processing start from like over 600, all these processing company need to issue a K1 for you. But now is only issue once it exceeds $20,000, and you have more than like over 200 transactions per year, which is massive because otherwise the administration and how to like keep all this document, this is like a lot. But of course, if you have a bookkeeping, everything like is there. You don't need all of these, but it's still like a lot of like paper that you need to keep at the backup document for your business. So the new rule that you don't need, they will not issue for you unless it's over 20,000 and more than 200 transactions per year. This reduces a lot of administration potential confusion by thousands of low income, low revenue seller receive 1099K. And of course, you still report income. That's why I say if you have a great bookkeeping in the back end, it will be cover everything, but all of these paperwork, you don't receive it, so you don't need to keep the record for it. Okay, now we talk about the fine lines, the limit, and the ship that you need to, like, you must acknowledge or you need to pay attention on. Number one, access, access business loss limitation. There's the part of most founders is overlooked. If you have a loss in your business flow through to your personal tax return, the law keep limitation how much you can tax deduct in a single year. If you investing aggressive, scaling fast, hiring heavily, and spending for hyper growth, you must coordinate with your CPA to ensure that you don't unnecessarily delay the utilization of your loss. Because they put a limitation in it, and you basically like need to roll over, carry forward the loss. Number two is clean energy credits are shifting. Some clean energy sustainability related credits was passed in the previous years is now become reduced or eliminated. So if you plan to use like any like EV credit or solar installations credits, need to make sure that you plan accordingly. And then the loss of deduction for employer provided meal. Starting in 2026, like employer provided meals normally, this will like massive effect in terms of your tax, business tax, like subsidized for our free meal provide on site or like breakdown, like snack, coffee, or like bottled water previously. It is called diminished affordable benefits meal provide to employee working late, cheap or overtime. It will eliminate it. So most of these is spent, which is typically like 50% is deductible, and sometimes 100% is deductible, now become like zero deductible. And you need to, like, if you provide significantly like food and beverage and some of these in your business for your employee, you need to evaluate it. Of course, like, I don't think like you need to cut everything and you make your employee, there's even no water to drink and all that. But of course, it's in terms of tax benefits. It's not deductible anymore. So make sure that you actually like watch and budget is accordingly. Because I know some companies like they want to be like very generous to their staff, their employee, because they receive so much in terms of tax deduction on that. If you give that benefits for your employee so that they enjoy the working environment, you can take 100% of deduction in your business, you would do that. But like in this case, you will not be able to take that deduction. So make sure that you actually plan accordingly on that. So I think that is that some of the men, of course, I know that there is a huge part in terms of healthcare regulation in terms of like whether you cannot have many people that will not have a subsidiary on in terms of healthcare. So many small business owners that like have a small team, like 4 or 5 of them, they normally like get their employee that go into the marketplace to buy the health insurance. But now there's no subsidiary on that part anymore. So many business owners need to find the way to buy health insurance for like small team, and the healthcare costs will be increased for like majority of many people, and also including the small business owners. So that would be like one of the very challenging things you need to pay attention on. But it depends on the blends and how you like search for and purchase on the markets to like buy the blend for your team, like small team 3 to 5 to under 10 people. I know that this is quite challenging, but this is one of the in terms of the build just parts. So make sure that you pay attention and plan accordingly in terms of your budgets. Calculate how much it costs for you to provide these benefits and where that money will need to coming in your 2026 budget. And so I know taxes is not, many people always like put tax in the back end. But tax, once you understand the tax code, you understand that it's a fact. Your business budget. You look at into like where's the business will have the benefits in terms of like tax deduction, that you can move some certain of money into that areas to help you to fuel or grow the business. But at the same time, there are also like other things that will affect your tax situation, like meal deduction and health insurance. So that also need to be accountable in terms of your budgets. If you don't do that, it will be like a lot of surprisingly. And of course, new policy, new tax code, new regulation there's some part of it that we cannot predict all the time how it actually will look like when it's going to affect into the market. So make sure that you give the room for your business to make sure that you navigate in all these chains and reduce what is beneficial for your business and try to avoid the pitfall that would like negatively affect to your business. So that is that. And I think like this new tax law, despite all the complexity and clearly favor in some part for the business owner, and also like of course if you like utilize all these tax codes that beneficial for your business, but also at the same time is have the challenge and the part you need to watch out. So I hope that this information is super helpful for you in at the year end and moving forward into 2026. And thank you so much for your time today. If this is helpful for you, save, rate us, send us the message, and we so appreciate for your time. And I'm looking forward to see you in the next episode. Bye bye.